FHA loans for bad credit coming up. Hey guys, I'm Adam Lesnar, and my oxygen is getting borrowers approved for a mortgage when other lenders say that it's just not possible. Today I'm going over FHA loans for bad credit, how to get approved, and exactly what you need to know in case it doesn't work out and you can't get approved. But I'm going to set you up for success. Here we go. So talking about FHA loans for bad credit, we're looking at purchasing a home, refinancing a home, doing a cash out refinance on a home with bad credit on FHA. That's fine. The thing that ticks me off is that so many lenders tell borrowers they can't do it if they're below 620. Like, they literally say it's impossible to get an FHA loan below 620. I want to go through specifics to tell you what you need to expect and how to kind of prepare for it. The other thing that I want to emphasize is just because you're above 620 doesn't necessarily mean you're going to be eligible for FHA anyways, because there's some technicalities behind some seasoning things. We'll talk about that. But I just want to encourage you that if you've been told by a lender that you don't qualify because of your credit score being below 620, I want to encourage you to take that extra effort to make another inquiry to a lender that actually knows what they're doing.
I'm a hard worker every day.
So, what's the lowest credit score you can possibly have to get approved for an FHA loan? The answer, 500. You have to have at least a 500 middle credit score to be approved for, or to be looked at and considered on an FHA loan. Now, what that means is you have 3 scores. The middle score is what's going to be used by the lender to get you approved. So if you have a 519, a 501, and a 498, the 501 is the score that's going to be used to qualify. The other thing that you want to keep in mind is that there's 2 different ways that the loan's going to be approved. You have an automated approval, and you have what's called a manual approval. So the automated approval is what happens is all of the data on your applications put into a system. All the lenders have the desktop underwriter is what they call it, puts it into a system. It's ran through, everything's weighed. Your loan to value, your credit score, your credit history, everything that's on there, what type of property you have, and just the overall application. All the factors are weighed, puts into the system, and it's going to give you either approve eligible, refer eligible, or refer with caution. So approve eligible means like you're good to go, you should be fine as long as as long as everything lines up with what your application says and we can verify that, you should be fine. A refer eligible means it's a little iffy, we really need to dive into it and have an underwriter do a manual underwrite, which a manual underwrite, things are more heavily scrutinized. You have to have a certain type of credit history, like you can't have any late payments on any installments in the last 12 months. So if you get a refer eligible, it's still possible. We've closed many manually underwritten loans, okay? But a lot of lenders don't. They just say, oh, we're not doing it. It's too labor intensive. It's too complex. We don't want to deal with it. So that's fine. But the third way that it comes through the desktop underwriter is going to be refer with caution. Refer with caution means it's not going to be good to go. You can't do it on FHA really, and you're going to have to find another alternative. And we'll talk about that. So some key points that you need to keep in mind when looking at getting an FHA loan with bad credit. First of all, you got to have the credit score, obviously. If you've had any housing events like a short sale, foreclosure, a deed in lieu of foreclosure, there's a 3-year waiting period between the time that housing event happened and when you can be eligible for an FHA loan. When talking about bankruptcy, if you had a Chapter 7 bankruptcy, there's a 2-year waiting period. If you had a Chapter 13 bankruptcy, there's a 12-month waiting period. You had to show that you had 12 months on-time payments on a Chapter 13 bankruptcy before you're going to be eligible for an FHA loan. So talking about debt-to-income ratio when you're doing an FHA loan, basically, a rule of thumb, you want to be 43 and below on a debt-to-income ratio. You can go up to 50. In some cases, you can even go up to 57 debt-to-income ratio. I'm not saying it's a great idea. I'm just saying it's possible on HUD guidelines, FHA guidelines, okay? So basically, you need to make double of whatever your debt is, including your mortgage and your credit cards and car loans and all that. So but just rule of thumb, roundabout number, you need to make double of what your liabilities are. And that's going to be based off of your gross income. Right? So before tax, if you're a W-2 employed. One thing you got to keep in mind too, FHA loans are only for primary residence. You can't buy a second home or investment property with an FHA loan. One thing to keep in mind is that these loans are full documentation loans. Sometimes people reach out to me to get a bank statement loan, but they want to do a low down payment, and it doesn't really work that way. A bank statement loan is a completely different product. I'll have a link in the description below with what that is. Something to keep in mind. If you're below 580 credit score and you're trying to do an FHA loan, minimum down payment, 10%. You're not getting around it. If you're above 580, 3.5% down. No questions asked, okay? But if you're below 580, from 580 to 500, if you're buying a house on FHA, it's going to be 10% down. If you're doing a refinance, you can go up to 96.5% if it's a rate and term refinance. If it's a cash out refinance, you're talking about going up to 85% loan to value. So simple terms, if it's a $100,000 loan, max loan amount is going to be $85,000. If you're doing a cash out refinance, consolidating debt, taking funds out for a home improvement or whatever the case is on an FHA loan. I can't stress enough the importance of having on-time payment history on your mortgage. If you have on-time payment history on your mortgage, meaning nothing more than 30 days late over the last 12 months, you're really going to be setting yourself up for success. I hope that makes sense. One thing I'm going to leave you with is that with FHA loans, there are max county loan limits. I'm going to include a link in below, either in the comments or in the show notes of so you can look up your max county loan limits in your county, because a lot of times you may not qualify for FHA, not because of you, but just because of the loan limits in your county. So you can take a look at that. I want to leave you with, if it turns out you don't meet some of those guidelines that I just went over for a cash out refinance with bad credit, it may be that a great alternative would be to do what's called like a portfolio loan, or some people call them non-QM loans. These are loans that fall outside normal lending guidelines, really designed to get folks approved when they don't meet traditional lending guidelines. It's like a short-term fix for short-term circumstances, getting you into a position where you can still accomplish your goals, whether it's consolidating debt or purchasing a home. It's better than renting, and it's better than not consolidating your high-interest credit card debt. So I encourage you to take a look at a portfolio loan. I'll leave a link in the description below so you can take a look to see maybe if a portfolio loan is a better option if you're not able to get approved for FHA at that time. But the thing is, 6 months from now, once you're in the portfolio loan, once you have 6 months on time payments or 12 months or whatever the case is, at that point you would probably refinance into a conventional loan or an FHA loan or whatever makes the most sense. The point is, there are options out there. I just want to encourage you to look into them. So I appreciate your time. If you have not done so yet, I invite you to subscribe. I appreciate every opportunity. Any questions, throw a comment below with whatever questions you have on something like this. And you're welcome to shoot me an inquiry. I'll leave a link in the notes below. But thank you. Take care.